There are so many investment platforms out there to choose from, but here are two main reasons why I've stuck with Wealthsimple for over 3 years now. One, there are no fees or commissions, and two, it is really easy and a lot of fun to use. So in this video today, I'll show you step by step how to set up your own Wealthsimple trade account and how to use it so you can become richer quicker. First, sign up with Wealthsimple. You can sign up for the desktop or mobile version. I prefer the mobile version, so I'm going to show you that. Go to the App Store for Apple or Android and download the Wealthsimple app. Then simply sign up with your email and create a password. This is what the Wealthsimple interface looks like. Next, you need to choose what account you want to open. So go to Add an Account. And if you have an account with another institution, you can just transfer that to Wealthsimple. But if not, then click Open a New Account. And here you'll see many different types of accounts. So how to choose which one to open? Now, many new investors in Canada don't know this and make the mistake of investing in the wrong type of account. Which accounts you invest in can have a massive impact on your taxes and on how fast your money will grow. There are basically two categories of accounts that you can use to invest money in: registered and non-registered accounts. This one here is the non-registered account. If you use this account to invest, you will have to pay taxes on all of your earnings, interest, dividends, and capital gains. And that can be 20–30% depending on your marginal tax rate. So don't invest in this account until you've maxed out your other registered accounts. Everything else on this page, except for the cash account and crypto, are registered accounts. The one most commonly used are the TFSA, RSP, and FHSA. And for most people, the TFSA is a great choice. Which account is the best for you to invest in first will depend on your priorities, and you can watch this video next if you want to find out more. So let's say you want to open a TFSA. Click on TFSA. Next, you have to choose how you want to invest. Let's call this investment mode. Choose between managed portfolio and self-directed investing. And again here, be careful because many people make the less optimal choice for them. I'll explain the differences and tell you which one I use. If you choose managed portfolio, it means that Wealthsimple, mostly with their robo-advisor, will choose investments for you based on the data you provide, like what your financial goals are, how much risk you want to take, and so on. Many people take this option thinking that it's easier, that they don't need to sweat the details, but it also comes at a price because robo-advisors don't necessarily make more money than even the average beginner investor, and you don't have the flexibility to pick your own investments. Also, managed portfolios come with a fee. Yes, the management fee is between 0.2 and 0.5%, which is still much lower than what a traditional broker would charge at 2% or more, but it's still more expensive than managing your investments yourself. And over time, these fees can add up. If you, for example, have $50,000 invested, a fee of 0.5% would be $250 each year. I definitely don't want to pay this. It's much easier than you think to invest on your own, even as a beginner. So if you want a more hands-on approach and decide for yourself what you want to invest in, then choose the option self-directed investing. I've done self-directed investing for more than 3 years now, and my portfolio has grown by about 35%. So once you've made your choice, for example, TFSA, self-directed investing, then Wealthsimple will ask you for some personal details. Name, date of birth, SIN number, employment information, and ask you to sign some T&Cs. If you look at my account, I have a TFSA, an RSP, and a non-registered account that I ended up not using, and a cryptocurrency account. The TFSA and RSP are both registered accounts and they are tax advantaged. I won't get into details, but the main point is that when you invest money within these accounts, registered accounts, you won't pay any tax on your investment income, at least not now. Plus, any money you invest into the RSP is tax deductible, so that will reduce your tax bill. So once your accounts are set up, you have many options to transfer money into your account: bank transfer, Interac, debit card, direct deposit, and so on. My favorite is direct deposit because it's one of the easiest and fastest way to transfer money in. Right now, I have $47 available to trade in my TFSA account. And let's say I want to transfer $150 into my account. So go to Add Money, and I've already got my bank account linked to Wealthsimple, so I can just tap on that and input the amount of money I want to deposit, $150. You could also schedule it or automate it. For example, you automatically deposit $500 on every 25th of the month. That's a great way to do it to stay consistent, but I like to do it manually, so as soon as I have some money to invest, I'll deposit it, input, and then submit. And it will instantly appear in my account. And there it is. The total I can invest in my TFSA now is $197.15. One quick tip if you're thinking about opening a Wealthsimple account, you can use my referral code in the descriptions down below to get a $25 cash bonus in your account once your account is funded. And also, full disclosure, I will also get the same amount as an affiliate. And you can even get an iPhone or Mac if you deposit $100,000 or more by December 13th. Here's one super important note when transferring money into a registered account like the TFSA or RRSP. There are limits to how much you can transfer or contribute. So make sure that you check what your contribution room is for each account and don't go over limit because there will be a penalty on it. Now to the fun part, investing. When you're on your Wealthsimple homepage, this here is the total amount of all your assets with Wealthsimple. And you can use the tabs here to see how your investments have grown over different time horizons. The past 1 month, 3 months, 6 months, and a year, and all time. My portfolio has grown by 35% over about 3.5 years. It's not crazy much, but much better than having the money in a savings account. And this is using self-directed investing with no fees and not using a robo-advisor. Down here are all of my holdings based on type of investment. And down here are my different accounts. Now let's say I want to buy a stock or ETF in my TFSA. I click on TFSA, then click on the trade button. And here you can simply search for stocks, ETFs, bonds, and most investment products. But you can't buy crypto, not within the TFSA. You can buy crypto ETFs though. Crypto can only be held in a non-registered account. For example, you can check out the Power Corporation of Canada stock, the ticker is POW by the way, listed on the Toronto Stock Exchange. If you want to invest in the US market, then Wealthsimple may not be the best choice for you because it charges a 1.5% currency conversion fee on both buying and selling US listed stocks. Some other platforms, Questrade for example, support Norbert's Gambit to avoid high currency conversion fees. But for Canadian investments and small amounts of money, no problem at all. So here's the POW page. You'll see the price here. If you go to 5 years, you'll see how the price changed over that 5-year period, and also the main details about the stock, like its highest and its lowest price to earning ratio, and yield. And if you're not sure yet if you want to buy it or not, you can just start it here and add it to your watch list. As a beginner investor, I mostly invested in ETFs, index ETFs to be precise. When you buy a single stock, you're basically exposing yourself to all the risk of that one stock. It can go up by a lot, but it can also nosedive. Professional investors like Warren Buffett take a lot of time to research and study each stock to pick the best one. But even he likes index funds because they immediately offer an investor exposure to a cross-section of businesses that in aggregate are bound to do well. Which means with an ETF index fund, you kind of buy a basket of often hundreds of different stocks, so you have inbuilt diversification. If, let's say, 10 stocks go down, there are 20 other stocks that could go up. One example of many index ETFs is the VFV by Vanguard, an index fund that tracks the S&P 500. Let's click on that and you'll see the current price is $143.19 as per recording of this video. It's increased by 105% over the past 5 years and by 41% over the past year. So say I want to buy one of these. Click on buy and let's input 1 share. Before you submit your order, you'll get a chance to review it and see if everything's okay. Now let's go back first because I want to show you something really cool. So the price of VFV is $143. But what if you only have $100 at the moment? Do you need to wait until you have the full amount? No, with Wealthsimple you can buy what's called fractional shares. So input the $100 that you have and it will calculate for you the fraction of the share that you can buy, here 0.69 of a share. This way, if you buy a rather expensive share, you don't have to wait until you have the full amount of money. There are also a few other great functions. Just now, we wanted to buy an ETF at what's called the market price, which is the current price it trades at right now in the market. But what if, just what if you thought that, no, I don't want to buy it at $143 now. The price is still fluctuating a lot and I want to buy it when it goes down to, let's say, $141. For that, you can use the limit function so that your order will automatically go through once the price reaches your specified price or lower. So here again, input 1 share, for example, then input $141 for the limit price. Make sure to review everything. And then you can select if you want the limit order to last for just 1 day or go on for 90 days or until canceled. Yes, you can cancel it if you change your mind. And this is really awesome, especially if you're investing larger funds, so you don't need to constantly monitor the price movements. And there are more ways that you can automate your investment journey. With your TFSA, for example, go to the settings button and you can set up what's called recurring investments. Set up, pick your stock or ETF, and input how many shares you want to buy and how frequently and where you want to take the money from. Then there's also dividend reinvestment. Some stocks and ETFs pay you dividends either monthly or quarterly. And if you turn on reinvest eligible dividends here, it will automatically reinvest all of your dividends and you don't have to do it manually. But you can't set it for individual investments. It's either on and off for all investments in an account type, here the TFSA. And while we're here, this is also where you can get all of your statements and tax documents. When you're about to file your taxes, you can get all of your tax documents here. For example, TFSA, and it will show you all the transactions you made in that account in detail. That way, you can also easily reconcile your investments and make sure that you don't over-contribute to your TFSA. Now, what about selling your investments? Also super easy. Go into your TFSA account and select the investment that you want to sell. For example, POW here. Click on Sell. And let's just sell 1 share. Here again, I can do market sell or limit sell. The current price is $44, but here I could automatically sell 1 share once it reaches the price of, let's say, $45. So let's say you have money available to trade here in your TFSA account. Can you just transfer it out if you need it? Yes, you can. Using this button here, you can move money from one account to another. But one very important note here, do this very carefully. Each account, registered accounts in particular, have rules and tax consequences. Let's say, for example, you have a TFSA contribution room of $20,000 now, and you've hit your maximum of $20,000 already in this year. In November, you decide to transfer out $5,000 out of your account. That contribution room will only be replenished in the next year. If you overcontribute this year, you will be charged with what's called a penalty tax. So make sure that you understand the rules before you transfer money in and out and between registered accounts. Now, what about the fees? The great thing is that Wealthsimple, unlike some other platforms, doesn't charge any commissions for buying and selling stocks and ETFs if you use a self-directed account. If you used a managed account, then the fees will depend on what investment tier you've reached. With Wealthsimple, there's Core, Premium, and Generation. I'm currently Core, that's below $100,000, so I would pay 0.5% if I use the managed investment option. That's why I don't do it. If you're a premium user, that's between $100,000 and $500,000 in assets, the fee is 0.4%. And for Generation, which is $500,000 and above, it's between 0.2 and 0.4%. But still, I wouldn't do it. And as I mentioned before, if you buy US stocks, there will be a currency conversion fee. So ideally stick to Canadian traded stocks and ETFs when using Wealthsimple. Now, Wealthsimple has 2 more cool accounts, which is the cash account and the cryptocurrency account. The cash account is very similar to a checking account, but there are no fees and earns much higher interest. 2.75% at the moment. It's definitely good to have if you just want to park money here temporarily, for example, from your paycheck before you decide where it goes into. Or you can also just use it as a checking account. You can pay your bills, send money, even order checks. You can get a virtual card that you can use for online transactions and even request a physical card. Now, what about crypto? What I love about Wealthsimple is that you can also buy and trade your crypto here. Although, important note, long-term crypto is best and safest when kept offline in a cold wallet, a hardware wallet. But if you're going to do it online, then Wealthsimple is great for that. You can easily open a crypto account, but Wealthsimple will ask you some questions to make sure that you understood the risk, because yes, crypto is highly volatile. I have some Bitcoin here, and the overview is very clean as the rest of Wealthsimple. But there are fees. Currently, it's 2% for the core tier and lower for the other tiers. Now, you might be wondering how safe Wealthsimple is. From a technical standpoint, no investment platforms are immune to cyber threats. But for more safety, you can use two-factor authentication, tfsa, with Wealthsimple using your phone number or an authenticator app to protect your account. It's easy, you can just download it from the App Store or Google Android Store or whatever it's called. And also, there are regulatory protections. And this, by the way, applies to financial institutions in general, not just Wealthsimple. If your financial institution collapses and can't pay you back, your cash investments are protected by institutions such as the CIPF and CDIC up to a certain amount only. But remember, it doesn't protect you from investment losses. That's on you. And it doesn't cover crypto either, unfortunately. What about customer support? These 3+ years using Wealthsimple, I never contacted their agents, but in case you need to talk to someone, Wealthsimple has customer support. So is Wealthsimple for you? Yes, if you're a Canadian resident, because non-residents can't use it. And ideally use it for Canadian listed investments. Now, in case you're still on the fence whether to open a TFSA, an RRSP, or an FHSA, watch this video next.